Scene script. Have you ever wondered about the current state of Russia's economy? Let's delve into it. At first glance, one might think that Russia's economy is resilient. The Kremlin certainly likes to paint a rosy picture, talking about its ability to weather Western sanctions and the strains of war. But let's scratch beneath the surface. Despite significant military and state spending driving growth, this has not translated into improved living standards for many Russians. A large portion of the population still grapples with low wages. The Russian ruble is weak and inflation is high. Imagine going to the grocery store and finding prices higher than they were just a week ago. That's a reality many Russians are living with. And it's not just about the rising prices. Increasing debt levels are also contributing to the economic challenges faced by the population. While Russia's economy has shown some growth, with GDP expected to grow by 2% this year, it's crucial to take a look at the broader picture. The instability of the ruble exchange rate, massive capital flight, and limited liquid reserves all point to an economy that's on shaky ground. Moreover, Russia's economic problems are not confined within its borders. The war with Ukraine and Western sanctions have had a significant impact on the ruble exchange rate, which has halved in value multiple times. The war has also led to a spike in oil and gas prices, boosting Russia's export revenues. However, these revenues are expected to decrease with the recent fall in gas prices and Western sanctions on Russian oil. And then there's the issue of poverty. Around 20 million people in Russia, or 14% of the population, are either in poverty or on the brink of it. That's a significant number of people struggling to make ends meet. So despite the Kremlin's positive portrayal, the real economic situation in Russia is quite challenging. But how does this compare to Russia's past economy or the economies of other countries? Well, let's take a quick journey back in time. In the past, Russia's economy was more stable, with a solid ruble and a better position in the international market. However, the current state of affairs paints a different picture. The ruble's value has halved multiple times, largely due to the ongoing war with Ukraine and the crippling Western sanctions. Inflation has risen, and capital flight is a major issue, with a large surplus regularly matched by a substantial outflow of capital. Now, how does this stack up against other economies? The war and sanctions have put Russia in a unique, challenging position. Other economies, even those impacted by wars, haven't faced the same combination of military conflict and extensive international sanctions. Russia's exclusion from international financial markets has further restricted its economic maneuverability, a constraint that many other nations don't face. Interestingly, despite these challenges, Russia has seen some economic growth. However, this growth doesn't translate into improved living standards for many citizens. The average wages have significantly decreased, and a large portion of the population still earns low wages. This situation starkly contrasts with other economies, where growth usually leads to improved living conditions. Let's also talk about capital flight. This is a situation where a large amount of capital or assets quickly leaves a country due to economic instability or better investment opportunities elsewhere. Russia is grappling with this issue, with a significant net outflow of capital regularly matching its large current account surplus. This situation is quite different from other economies where capital flight is less of a concern and efforts to control and prevent it are more effective. In essence, Russia's economy is showing resilience with some growth and significant state spending, especially on military and defense. Yet, these factors have not improved the overall economic health or the living standards of the population. The weak ruble, high inflation and increasing debt levels further contribute to the economic challenges faced by the population. Therefore, while there has been some growth, the Russian economy is increasingly resembling its Soviet-era structure. What about the impact of the war in Ukraine on Russia's economy? The ongoing conflict in Ukraine has cast a complex shadow over Russia's economy. It's a maelstrom of factors at play, with the ruble exchange rate, inflation, capital flight, and export revenues all caught up in the whirlwind. The ruble, Russia's currency, has been in a state of flux, oscillating in value multiple times due to the tensions of the war and the weight of Western sanctions. The constant shifting of its value has created an environment of uncertainty, making it a risky proposition for both domestic and international investors. This instability has also contributed to inflation, as the devaluation of the ruble has led to a rise in prices, capital flight has emerged as a major issue. In an economy where a large current account surplus is regularly matched by a substantial net outflow of capital, the war has only exacerbated the situation. The uncertainty of the conflict has led to an even greater outflow of capital, as investors seek more stable and secure markets. On the other hand, the war has also inadvertently boosted Russia's export revenues. The conflict led to a spike in oil and gas prices, which in turn pushed up Russia's export earnings. But this silver lining has its cloud. The recent fall in gas prices, coupled with Western sanctions on Russian oil, are expected to significantly reduce these export revenues in the future. These economic implications of the war are not just numbers and percentages, they are the realities that the Russian people face every day. The weak ruble and high inflation mean that their money buys less, while the capital flight and reduced export revenues mean fewer investments and jobs. Thus, the war in Ukraine has had a significant impact on Russia's economy, with both positive and negative effects. So, what does the future hold for Russia's economy? As we gaze into the crystal ball, the economic forecasts for Russia appear somewhat cloudy. The possibility of stagnation or a serious slump looms large. Renowned Russian economist Igor Lipsitz suggests that the real situation of Russia's economy is far from rosy, despite the Kremlin's positive portrayal. Lipsitz predicts economic stagnation or a serious downturn after the upcoming presidential election in March. The impact of the presidential election on the economy is hard to predict, but it could potentially lead to significant changes in economic policy, which could further influence the country's economic trajectory. If the new administration continues on the current path, the economic prospects may remain bleak. However, the future of Russia's economy is not only tied to domestic politics, but also to international relations. The continuation of the war in Ukraine and the endurance of Western sanctions pose significant threats to the economy's stability. Western sanctions, in particular, have driven the Russian economy into a wartime mode, with significant military and state spending driving growth. However, this growth has not translated into improved living standards for many Russians, as a large portion of the population still earns low wages. The weak ruble, high inflation, and increasing debt levels further contribute to the economic challenges faced by the population. The war in Ukraine led to a spike in oil and gas prices, boosting Russia's export revenues. But the recent fall in gas prices and Western sanctions on Russian oil are expected to significantly reduce export revenues. Russia's foreign exchange reserves are limited, making it harder for the country to pay for critical imports. Moreover, Russia's main economic problem, capital flight, is likely to persist. With a large current account surplus regularly matched by a substantial net outflow of capital, the inability to control capital flight and the impact of Western sanctions are limiting Russia's economic prospects. Therefore, while Russia's economy has shown resilience, the future holds numerous challenges and uncertainties. Now let's recap what we've discussed about Russia's economy. We started with the current state of the economy, discussing how Russia, despite facing Western sanctions and the strains of the war on Ukraine, has shown resilience. Its GDP, which declined by 2.1% last year, is expected to grow by 2% this year. However, this growth has not translated into improved living standards for many Russians, with a significant portion of the population still earning low wages. We then moved on to comparisons with the past and other economies. We observed that Russia's economy is increasingly resembling the Soviet era in terms of structure and key indicators. Unemployment is low, but average wages have significantly decreased. The inability to control capital flight and the impact of Western sanctions are limiting Russia's economic growth and potential. We then delved into the impact of the war in Ukraine on Russia's economy. The war has led to a fluctuating ruble exchange rate, massive capital flight, limited liquid reserves, and exclusion from international financial markets. Despite these challenges, Russia is carrying out a major rearmament, increasing military expenditures. Finally, we discussed the future of Russia's economy. We noted that Russia's main economic problem is capital flight, with a large current account surplus regularly matched by a substantial net outflow of capital. The recent fall in gas prices and Western sanctions on Russian oil are expected to significantly reduce export revenues. Russia's last remaining reserve of cash is its sovereign wealth fund, but the extent to which these assets are liquid is unclear. In conclusion, while Russia's economy has proved resilient in the face of numerous challenges, it is clear that significant hurdles lie ahead. The combination of internal economic issues, external pressures from sanctions, and the ongoing war in Ukraine present a complex and challenging landscape for Russia's economy in the years to come.